Why do I need to journal my trades? Why do I need to keep a record of the trades I've taken over time? Why is the trading journal important? Let's find out in today's video. Hi everyone, my name is Barbara. You can call me the girl who trades. In today's video, we're talking about journaling your trades, how to do it properly, and the importance of actually keeping a trading journal. Now, even before I go any further, I know people will be like, why do I need to know this? Like, what's the point of keeping a trading journal? It's so important because you need to be able to document what you've done, why you did them, and then over time you have a wealth of information that you can refer to and make reference to and know why and the thoughts behind you taking those trades. Every trade you take on the market is a lesson, whether it ends in profit, break even, or a loss. That's a lesson in itself. So if you keep a trading journal, that's a document that contains invaluable lessons that you can learn from, and then it will improve your trading over time. Believe me, if you can reflect on the trades, the accounts you've blown in the past, and known what you did wrong, you probably not repeat them the next time because you know the outcome of that. So it's important to know how to journal your trades. So what is a trading journal? It's just a record of your trading activity over time. That's basically what it is. So in a trading journal, you normally document what you are doing, what entry you are taking, what is the entry price, what time are you taking the trade, what day is it, the reason why you are taking the trade, is it in confluence with your trading plan, and a few other pointers that we'll talk about later in the video. But why is a trading journal even important? Now, it provides you a tool for you to evaluate yourself objectively. So it isn't about emotion. It's not about you thinking that I've been doing well so far or I'm doing poorly. This is an objective assessment. So you have this document. You can look at it like, I took 10 trades. I got 5 of them in losses, 3 of them at break even, 2 of them in profit. Why did the losses happen? Why did the break evens happen? Why did the profits happen? So you can objectively assess yourself every time you look at the chart. It also helps you to monitor your trading plan, and then you can also assess and modify it. So you have a trading plan. You've you've taken about 20 trades, and you realize that 18 of them are losses. It may give you a pointer that you should be able to maybe tweak it a little bit, or like learn from that and be able to make adjustments to improve your trades. Okay, and then another very important reason why I always tell people that you should learn to journal your trades. So you know how important discipline is in the trading business. Like if you want to be a trader, discipline is so important. Like it's one of the most important characteristics you need to develop in order to become a successful trader. Now, if you can't even bring yourself to consistently write down or document your trades, you can't discipline yourself enough to document your trades every single time, most likely you won't be disciplined when it comes to the market. It's so important. Little things, I mean, even in your daily life, if you introduce some things that you have to discipline yourself about, it reflects in your trading journey. So you've promised yourself that you're not going to eat after 10 p.m. and you are always eating after 10 p.m. It's telling about how your trading journey might end up going. So it's a discipline that helps you to be able to do something repeatedly and consistently. And that's the same mechanism, the same methodology you may need to apply on the market. So that's one reason why documenting your trades is so important. Now, another thing that journaling your trades helps you to do is that it tells you what you're good at. So it means that you can have a means of trading. So personally for me, I typically trade support and resistance. I trade with trend lines. I trade with psychological levels. So this helps you to know that when I trade support and resistance, it seems like I'm getting better trades that like hit my profit levels, or when I trade with my trend lines, I end up hitting stop loss quite consistently. So maybe trend lines may not be favorable for me, but support and resistance is working for me. So it helps you always to be objective about the things that you're doing, and you can actually make very good and informed decisions when it comes to your trading. For most beginner traders, honestly, we downplay the importance of having a trading journal. And I think that's normal. Usually you don't see the importance of something until you've done it for a while, and then you see how valuable it is to you. Keeping a trading journal is not something your mentor can do for you. No book can do it for you. No YouTube video can do it for you. You have to do it for yourself. You have to do it for yourself and develop that discipline for yourself, and it will be telling in your trading after a while. Honestly, I have learned the hard way. I mean, for a very long time I wasn't journaling my trades, and I wish I had, because then I would know the reasons why I took some losses, the reasons why I got some profits. I mean, the good trades I had, the bad ones, why did they happen? So keeping a trading journal is one of the invaluable lessons and disciplines that you have to develop as a beginner trader if you want to make it long term in this business. Now, a few apps that you can use. Personally, I just use Google Sheets. I just have like a spreadsheet with all the pointers, and then I just fill them in as I go. You can use your normal pen and paper. Get a book that you can document in if you are like me and you like to write stuff, or you can use any of these apps. Google Docs is fine. Google Sheets I also find very useful most of the time, because sometimes I use it to calculate my profits and stuff like that. There are some other apps, Evernote, Transno. They are all very useful. Regular Microsoft Word, Microsoft Excel, you can use that as well. I think there are a lot of apps, but these are what personally I have used at one point or the other. So you can check them out, and if it helps you, that's great. I want us to get into the charts, and then I will use an example of a trade to actually take us through the points that I usually put in my trading journal, and then we will use that as an example to go through the different points and the different things you should do whilst you are journaling your trade throughout, from beginning to the end of the trade. Let's get into the charts. Okay, so welcome to the chart. So what I've done here is I have scaled, I've sent the chart to 20th of August, and then on the daily time frame I have mapped out my area of support. Now I move down to the 4-hour time frame, and usually that's where I draw my my trend line on the 4-hour time frame, and then I scale down to the 1 hour to look for entries. So now looking at this chart, let me just go back slightly. On the 1 hour. So what I usually look at is that once I've mapped out this area of support on my chart, then I look at how price reacts to that area, and then I will look to take entries. So I'm also very cautious of the time that I take entries. So in this instance, if this setup had happened around the London session, I would have considered taking entries at this point. But this occurring in the Asian session is not personally in my trading plan. I don't trade in the Asian session. I don't take my entries in the Asian session. So I would probably have not taken this trade. Okay, so I'll just forward that, and you see what happens, because things get funny in the Asian session for me. So I'm still looking for buys. Thank you. Let's see what time this is. 2 a.m. again, Asian session. I don't take my trades in the Asian session, so I will let that go. Otherwise, this is an engulfing candle and could have been an entry for me. So again, that would have been a bad move. So let's see what time this is, because this is another engulfing candle at 8 a.m. London session. That is good enough for me to take my trade. So when this happens, I can now enter this trade. And then in my journal, I have to state the date and the time I'm taking the trade. It helps me know that, okay, in this particular session, if I take my trades in these sessions, I end up, this is how it goes. Or if I take these trades at these times, it goes well. This is exactly what I've learned over time. That usually when I take my entries in the Asian session, I don't do too well. So I stopped taking entries in the Asian session. I only take my entries in the New York session or the London session. So I would take a buy here, and then I place my stop loss below the price, a few pips below the last wick. And then my first take profit target is this previous support, which may act as resistance. That's where my first take profit is. So I will pull this up there. And then my second take profit, usually I would put at the next resistance level, the actual resistance. So this area acted as resistance, so I will use that as my second take profit level. Now when I have done this mapping on my chart, I don't just jump in. So once this is done, I document before I press anything. This helps to prevent revenge trading, as I said earlier. So I'm going to document this, and then we will jump on the trade. So what I'm going to put down next is the confirmation. Why am I entering this trade? So my confirmation is a bullish engulfing candle at support, and so I think that price is going to go up. And then there's also this triple bottom formation that I saw on the daily. So I have confirmation which is in line with my trading system, so I can go in. Then I will take I'll state my take profit 1 and my take profit 2 in pips. I'll write that down as well. And then my stop loss also in pips. Then another very important thing, my risk reward ratio. So for my take profit 1, my risk reward ratio must be 2 or more. So it should be 2 and above. So in this case it's 2.5, and then my second take profit target is 5.3. That's fine, almost 5.4. That's very good for me. Okay, so let's go. We'll start taking another thing that I find very important is to take note of how much price pulls back before moving profit. It's very, very, very important. This is because if you don't take note of that, you may panic when your trade starts pulling back as soon as you enter, but then that may be just normal. So we'll take note of that, and that will be also stated in pips before we go on. Okay, all right. So we go on. So as soon as we entered, price pulled back, and so sometimes you feel like as soon as you entered the trade, it started reversing in against you, but that's normal. The pullback may be normal. So there we go, boom, this big bullish candle. So we know that there's hope for the future. So let's see how much price pulled back. So price pulled back almost 24 pips before moving up in profit. So that means that that's almost 80% before going up in profit. So that's normal, and so it's important to know how much price averagely pulls back with your entry, so that you don't panic when it does that. So we keep on going. Let's see how it's going to go. You realize it went up in profit, came back almost to our entry point, and then it starts coming down again, then boom, starts going up again. Let's see the time this move happened. This is around 11 p.m. So this should tell you how long this trade is taking to play out. You should know how long your trade takes, how your emotions are. This very minor resistance here, if price breaks this area, I'll move my stop loss to entry to be sure that I mitigate any losses. So sometimes, okay, so now once price broke past this minor resistance area, I move my stop loss to entry. This way I mitigate any losses, any potential losses that I may have. Okay, so we keep going at it and see. And this must also be documented in your trading journal, and that falls under trade management notes. So at the point at which you move stop loss to break even should be in your trade management notes, and this should be updated as price as your trade is going on. So as soon as you move stop loss to entry at the next resistance level, you state that in your trading journal. And then also right now we've hit take profit one. First thing you have to do is to check how long it took to hit take profit one. So in this case, it took us 3 days and 1 hour to hit take profit one. So you know how long you have to wait for your trades to play out. This is very, very, very important. So in this case, it's taken us 3 days and 1 hour. We've hit take profit one. I mean, granted, there was a weekend there, so it's 20th to 22nd. So there was a weekend there, but yes, so it's 3 days and 1 hour that is taken to play out. And then we are going to, at this point, we may take profit. I usually will take 80% of my profit at take profit one and then leave the rest to run if it potentially goes to take profit two. So let's see if this will go to take profit two. So you realize the support, let me show you something. The support that became resistance at this point I was talking about, you realize that the price came down, we tested it, and it's going back up. This here may be a signal for me to re-enter. So I could have re-entered because you realize price broke the trend line, came to retest, and then it's going back up. Let's see how it will continue. It's come back, okay. All right, very small candles there. Okay, it's pushing up now. Okay, down again, down, almost came down to the trend line. Okay, so for some people, if the trade is taking so long to play out, they may exit the trade, and you should put all those things down in your trading journal. That trade was taking too long, I was getting impatient, so I exited the trade, maybe at entry or at whatever point you did exit the trade. So yeah, we've hit take profit two. We've hit take profit two. So let's see how long it took to hit take profit two as well. So starting from our entry point right here, we're going to measure. So a total of 5 days and 9 hours. That includes 2 days of the weekend. So 5 days and 9 hours it took to hit take profit two. So you state that as well in your trading journal. So that's just how to journal the trade. And then you will usually I take put down the date and the time, and then the duration that it took to hit take profit one and two, and then I put down notes on closing the position. So if you close the position before it hit take profit, before it hit stop loss, either you put down the notes in your notes. I exited the position before take profit because of ABC, and then or I exited the trade before take profit because of this and that. And then usually if you're using TradingView, it allows you to take images of your chart. You just click this camera button right here, and then you can take a snapshot of your chart. So I usually take an entry snapshot and then an exit snapshot. So I take the snapshots and I put them in my journal as well if I'm using an electronic one or one that is online. This is also important in being able to assess yourself and be able to judge your trades. All right, guys, I hope you've learned something today about journaling your trades. Please let me know in the comments what you've learned from today's video. Please subscribe to the channel, like the videos, share it with your friends, let them also come and learn something. Follow me on Instagram, it's the girl who trades, and on TikTok, it's the girl who trades GH. Please, I do not have a Telegram Signal page. I'm not on Facebook, I'm not on Twitter. If anyone asks you to send them money, I keep saying this, please don't. I won't ask you to send me money. I don't manage accounts for anyone. Till the next video, it's the girl who trades.